was a dramatic ride on Wall Street Friday for bruised investors. Part of the market gained from the disastrous session on Thursday, but for others, it was just more bad news. The Dow recovered somewhat from its collapse the day before. It spiked Friday in early trading on a better-than-expected jobs report, but it plunged later by 200 points, finally setting up about 61 points or 0.5%. The tech-heavy Nasdaq closed down nearly 24 points or nearly 1%. That's getting close to a 5% loss from a year ago. And the S&P didn't feel the boost either. It stayed on its downward trend, but just barely, ending 0.7% in the red. Some good news on Friday helped ease the blues. A report on jobs growth showed improvements. The government reported 117,000 jobs were added in July. That was much better than economists had expected. And the unemployment rate eased up a bit to end the month at just over 9%. That was 0.1% better than in June. But with millions still looking for work, the U.S. president says there's much more that can be done.
Carlos, the Dow's wild week left investors dazed and confused. As you can see, it was mainly downhill. The worst came on Thursday as the index lost more than 500 points. Shares on Tuesday slid more than 260 after the chaos of raising the U.S. debt ceiling. The Dow is down just over 1% though this year so far.
The economic uncertainty in Europe caused markets to drop. The FTSE in London closed down 2.5%, while Germany's DAX lost nearly 3%. France CAC 40 fell 1.25%, and the Zurich SMI more than 2%.
Let's take a closer look now at how European markets have fared over the past month. The FT 100 has dropped considerably in the last week and is down nearly 13% over the last 30 days. It's much the same in Germany. Here you can see this steep recent drop, and over the past month it's down more than 16%. Finally to France, where the CAC 40 has seen the biggest drop, more than 17.5%. So all that being said, it's no surprise the European Commissioner went before cameras to try and calm fears.
In this context, it is very important that we can restore confidence into the markets, and I would encourage everybody now to stay calm and breathe deeply and really look at the economic fundamentals of the countries that have been under pressure recently. Both Italy and Spain have taken very important decisions on fiscal consolidation.
Yes, that's right. We have breaking news over here, and because we have the Standard & Poor's press release. Standard & Poor's actually has downgraded the U.S. Credit rating. I'm going to read it because I have it here. It says, United States of America long-term rating lowered to AA+ due political risk, a rising debt burden, outlook negative. And I'm going to continue reading over here. It says, we have lowered our long-term sovereign credit rating on the U.S. of America to AA+ from AAA and affirmed the A1 short-term rating. It has another interesting point over here. I'm reading. This is the Standard & Poor's press release that we have here at CNN. It says the downgrade reflects our opinion that the fiscal consolidation plan that Congress and the administration recently agreed to falls short of what, in our view, would be necessary to stabilize the government's medium-term debt dynamics. I'm going to continue reading because this is breaking news here in CNN. More broadly, it says the press release from Standard & Poor's. More broadly, the downgrade reflects our view that the effectiveness, stability, and predictability of the American policymaking and political institutions have weakened at a time of ongoing fiscal and economic challenges to a degree more than we envisioned when we assigned a negative outlook to the rating on April 18, 2011. So here you go. The U.S. has been downgraded by Standard & Poor's. This is a story that we've been following all day long. John, you were saying?
Yeah, well, one of the problems that the United States is now facing is that if you listen
I'm going to repeat the story that we have right now. Standard & Poor's has downgraded the U.S. debt. It reads the United States of America long-term rating lowered to AA+ due political risks, rising debt burden, outlook negative. This is the breaking news that we're getting right now at 8:27 p.m. Eastern time. So, John, you have the story right now. This is what's going on. It's already been confirmed, John.
Yeah, we have confirmed it. We've got the information here now from Standard & Poor's. What this essentially now means, what this one rating agency is now saying, is that US Treasuries that were once seen as the safest treasuries, the safest bonds in the world, are now rated lower than bonds which have been issued by countries like the United Kingdom, like Germany, France, or Canada. And there is a warning too, which is coming from Standard & Poor's, that essentially there could be another downgrade within 12 to 18 months.